Hey guys, Dave here again, your favorite mortgage guy. I get this question all the time. Hey, how is the lender going to calculate my rental income? So I've actually made spreadsheets for just about everything that I do. And this spreadsheet, I think, is pretty helpful for me, kind of calculating what your rental income is. And hopefully something like this can be kind of helpful for you too. Um, Basically what I do is I go in and whatever's on your taxes, I'll literally kind of put it into my spreadsheet. So this is for just part of it, 2019. These things here, property A, it looks like it had a line 21, which is your profit here, right? Or your loss. You'd have a profit or a loss there. Line 21 on this one was zero. Actually, everything was zeroed out here, and there's nothing else. There actually is depreciation here. So I guess I can put that in there. So we got zero profit and then 4,059 in depreciation on this one. So theoretically 338 per month. Actually on this one there was only there was zero rental days, so that's gonna zero that out. Let's see here. So the next line here is 6,095 in line 21. Depreciation on this, line 18 here was 10,510. So I'll throw that in there. I kind of do this one backwards a little bit. 10,510. So that's an add back. The next and I'll just kind of like scoot this over here so I don't have to keep moving that. The next add back is tax, line 16 here. That was 3,230 for this property. Okay, the next one is mortgage interest. That's an add back. So 6,510 here. So we'll throw that in there. And the last add back that an underwriter is going to look at is insurance. So we'll stick that in there real quick, 804 right here. So we'll throw that in there, 804. And for property C, we can kind of do the same thing, and maybe I'll just do it from the top down, 1202, 16036, 3412, and then 10,834 in depreciation, and the profit for that year was 6707. So boom, 31 to 82 per month. And that in a nutshell is kind of how it goes. Obviously we would fill these figures in over on the right as well once we pick up 2020, but essentially that's how it's calculated. Is all of these your total line 21 profit and loss, plus you add back depreciation, you add back tax, you add back the mortgage interest, and add back the insurance. You divide all that by 12. Now one thing you'll notice here, fair rental days. Okay, so in here we have 365 and 365. Sometimes if for instance, let's say that a property was only there for 240 days and all of those stayed the same. Actually, now look at that. That's actually even more. Let me move that back to 365 and you can see how much less that is. So actually having the correct amount of fair rental days in there is a good thing for you. It actually helps to not use the whole year if you actually haven't rented it out the whole year. But at any rate, and then just keep in mind, hey, depreciation, I mean, that is a free write-off that adds back to your income. So you want to make sure that you're utilizing that in your in your rental income as well, because when you're trying to do a mortgage, it really helps to have that depreciation in there. All right, but yeah, that's essentially the way that an underwriter is going to look at this. Of course, they're going to kind of average it with 2020, 2019 and 2020. I'm doing this video in 2021. Of course, it'll change next year, but at any rate, that should kind of give you an idea of how the underwriter will calculate that income. All right, guys, thanks for watching.